Hello, friends. This is Manish Shah from UpperCrust Wealth PMS. I'm going to take market and economic outlook for the month of May 2023. So, hello, friends. In the next few minutes, I'm going to take you through the key events of the recent past and UpperCrust PMS's view on the equity markets. After 3 consecutive months where markets corrected, April saw a meaningful bounce. Markets were up by about 6% in India in April. Most of the global markets also went up during this month. After the banking scare in March, led by the regional banks in the US and Credit Suisse in Europe, markets rejoiced some calmness returning back. Global energy prices also softened during the month, and markets reacted to the corporate earnings. While there have been fears of global recession in the making, recent US GDP growth as well as US corporate earnings point out to renowned resilience in the US economy. Indian markets also reacted to Q4 earnings print as well. While it's still early days to initial trends from the banking sector pointing towards continued strong earning momentum, while IT sector saw weaker than expected earnings. Over the next months, as broader market earnings get released, one will have a better sense of near-term earnings outlook. There have been mixed views on the prospects of monsoon in India. While the private forecasters climate predicts a below average monsoon, the Indian Met Department forecasts monsoon to be in line with longer term averages. Basis indicators like the FMCG industry sales trend on a post-COVID trend line to a pre-COVID trend line, it does appear that rural India is taking longer to get back to the earlier consumption trends, and so a lower than average monsoon can further push the rural economy, rural sector recovery. April continued the trend seen in the March 2023 in terms of institutional flow activity. Both FIIs and DIIs have been net buyers in the Indian equities. Valuations have moderated a bit as markets have consolidated over the last 18 months. These 18 months have also seen significant macro shocks and unprecedented war in the Ukraine, spiking crude above the $100, significant FII selling, hike in global inflation and interest rate, etc. It does appear that the rate of change of many of these macro variables is now settling down. The overall health of the balance sheets of the corporate India is in very good shape, and overall we are seeing a capex by corporates which was in slow lane in the last decade. They are firming up. Capex today is the source of future stream of cash flows and profits tomorrow. And so what's important to see the continued strength in the investment team by the corporates. And so while medium-term prospects of the corporate India remain intact in the near term, we do think that sentiment of the local state elections as well as the run-up to the general elections in 2024 is likely to keep markets volatile. Given that ups and downs are part and parcel of the asset class like equities, it is only natural to expect sustained volatility in the times ahead. However, rather than fearing over the fear of fall, we would encourage investors to use such opportunities to increase allocations to equities, especially if one is underweight to this asset class. Given this, a disciplined asset allocation with a focus on longer term goals is imperative, and equities continue to be an important avenue to fulfill longer term goal obligations. Be patient investors, and do remember that the time in the market is more important than timing the markets. Thank you and wish you a very happy investing from the UpperCrust Wealth PMS.